In this video, we're first going to talk about the 4 best candlestick strategies. I have some entries for you. I show you exactly how to do a multi-time frame analysis, where to get in, where to put your stop loss and everything else. And then at the end of the video, I also have a short discussion on do candlesticks work, and there's my take on it. So don't miss the end of this video. And the first candlestick pattern I want to talk about is the combination of a pin bar or tweezers. And we're going to do a multi-time frame strategy here. When we talk about tweezers, we are referring to 2 consecutive pin bars. So like in this example, we are starting on a 4-hour time frame here, and then we're going to make our way top down to the lower time frames. But on a 4-hour, we see we have 2 pin bars, and that's what we generally consider a tweezer formation. We can then zoom out, and we always have to ask ourselves, does the tweezer that we're seeing, does it make sense in the bigger picture? So we zoom out and we analyze the trend and the trend structure and the trend stage, and does it occur in the right context? And what we see here is that we are clearly in a downtrend, and the tweezer we are seeing here on the right hand side of the chart. So we're seeing the tweezer in a downtrend, which is good because it can help us get into trend following trades at this stage. We are hopefully here at the end of a correction pullback, and we are then using the tweezer and the pin bar to trade into a next trending wave. So we're going with the trend, and that's a great starting point. Generally, it is always recommended to trade with a higher time frame or with the long-term trend. And you can just do that by either going to a higher time frame or zooming out to see where are you in the bigger picture. You can also see that this occurs right at a previous flip zone. So the previous support that we have seen here is now acting as resistance, which is also a great finding. We can also find more things. What we are doing here is we're adding the daily moving average 20 period on this chart, and you can see that the pin bar or the tweezer formation occurs right at this area, which is another good confluence signal. And generally what you want to do is stack and combine as many confluence factors as you can to get the best signals. Another thing that we can see here is that we are at a trend line. So the tweezer pin bar occurs at the trend line, which is also great. Then we can slowly start making our way to the lower time frames. Now we're going from the 4-hour to the 1-hour. And what we're seeing here is increased volatility. This is the tweezer pattern, but on the lower time frame. And when we look at what is going on here, we can clearly see the trend that we have seen develop, strong uptrend, and then suddenly we're seeing larger candles and also more red candles. And this is increase on volatility. Volatility refers to the candle size and generally how much noise there is. And there's this famous quote from George Soros. He said that the volatility peaks at turning points and then diminishes as the trend becomes established. So this means that during established trend, you generally have lower volatility, candles are smaller, it's more orderly, and then at turning points, volatility and the noise increases. This is occurring because you see more back and forth. There's a lot of probably buyers getting out of their trades, new sellers are getting into their trades, so there's a lot of noise going on, and this can often, not always, point to turning points. Then we can go even further down. We go now through the 15-minute time frame, and what we can see here is a so-called triple tap. We have 3 consecutive higher highs, but each high is weaker. You can see during the uptrend previously, the price was easily able to push higher. From here to here, we made a higher high. Then at this high, what is also very interesting is the sequence of selling. We are suddenly seeing more selling, which we haven't seen in the previous uptrend. That's also a good additional information piece. Then you can see the market makes another push, but this time from here to here, we barely are able to make a new higher high. So we show weakness. If you would add an RSI, for example, or a MACD or a stochastic, you would see that there is a divergence here because this is the weakness in the highs. Then what you see after this high is an even stronger selling period. You can see here the market really sold off very strongly, and this is where we see the strongest selling sequence in all of this uptrend. Those are very important micro pieces of information, micro price action, micro trend structure that we need to observe, and we can then find it on the lower time frame. Generally speaking, what you then want to do is when you look for trades, what you do is you look for a breakout out of a high or low structure. Here we can very nicely use the previous resistance and support area. The market broke below it. We retest the support now as resistance, and then when the market moves lower, this is generally where you look for entries. What you can do is you get in here. You have a few options with your stop loss as always. Very safe all the way up here, which is maybe a little bit too far. You could most of the time be a little bit more aggressive. Sometimes you will be kicked out, but on the other hand, you will get a higher reward to risk ratio. So generally speaking, I would recommend trying out stop loss strategies somewhere in the middle. Not all the way at the high, but also not too close at the current price. Somewhere in the middle, and then see how it goes. And then you can see afterwards the market rolled over and we are trading into a new downtrend. So we can very nicely see how analysis unfolded. We started with the tweezer. We saw that the tweezer makes sense in the overall picture. We had a lot of confluence here, support, resistance, the higher time frame moving average, the trend line. Then we had a great lower time frame pattern, and all of that helped us to realize a very interesting and profitable trading scenario. Next, we have a variation of another pin bar. We're looking at deceleration, which is maybe one of my favorite patterns when it comes to pin bars or candlesticks in general. And the deceleration pattern is a 3 candlestick pattern, and we're seeing it here. We have a strong bullish candle in an uptrend. Then we have the pin bar here, and then afterwards we have a bearish candle. So we can very nicely see the gradual change in price action and momentum. Strong buying, neutral, and then we move over to selling. This is the 4 hour, and we're going to make our way to the lower time frame. Here we are now on the 15-minute time frame, and this is our deceleration pattern. And we can very nicely see the different components. We make higher highs here with a strong bullish candle. That's the candle that we are seeing here. Then the double or triple top, this is where we also have our high of the pin bar. Here you can see that. And then on the right side we have the lower high, which corresponds to here the lower high on the red candle. And I would generally recommend to get to know the lower time frame micro price structure of the higher time frame candles. A lot of traders like or are interested in trading candlesticks, but they have a very shallow understanding of it. And what you can do to train your understanding, look for the candlestick patterns on the higher time frame and then go to the lower time frame and really see what is happening on the lower time frame, what is the microstructure on the higher time frame candles. You will learn a lot. What we can then do also is add the Bollinger Bands. I made a recent video on my YouTube channel. It's the last video before this actually, and I talk a lot about Bollinger Bands and a few very interesting Bollinger Band strategies. So what we are seeing here is a classic Bollinger Band trend change dynamic. We are seeing here in an uptrend, the Bollinger Bands are very far away from each other and very wide. Then we are moving into a Bollinger Band contraction. The Bollinger Bands contract. This is often a sign that something is changing in the market. You can see the Bollinger Bands contract because we have this long sideways consolidation, which is very different than what we usually see during an uptrend. During an uptrend, what you generally see is a strong buying phase, a short consolidation, and then a continuation. Whereas here we have a very long consolidation. That is often a good sign that something is changing in the market dynamics. Then what you can see here afterwards, we trade a longer period into the outer bands. We also break this support resistance area. We have our first pullback. The pullback is kind of a liquidity run. We move back into the pattern, not too deep, but we also touch the opposite side of the Bollinger Bands. This is a Bollinger Band pullback. We don't stay long at the Bollinger Bands, which is a good signal if you're looking for short continuations. We break the trend line here and we get back below this area. At this point, you could look for a short entry. We can even go to the 5-minute for that and time our entry. This is how it looks on the 5-minute now. You can see we are waiting here for the trend line to break. Stop loss wise, you could put it above this recent high. A lot of traders are putting it all the way up here, which is, I think, a little bit too safe. In trading, nothing is 100% safe, obviously. There's always a huge risk involved. But when it comes to especially timing those day trading entries on a 5-minute, I would recommend to try the little bit more aggressive entries. You don't have to put your stop loss right at or very close to the trend line, but try experimenting with putting it above the recent high. And then target wise, we look left and here's the base breakout. So here is where the trend started. Here's where we had our breakout. And very often the market will make its way back into it. When it comes to the target, I would recommend putting the target a little bit above the base here of the breakout area. Don't put it too far below. Otherwise, you may risk that the market is turning ahead of it. This is a very strong support area where you can often see a reaction. And you can see afterwards the market moved into this area. We saw reaction. Eventually it seems like the market is moving lower, but you can see there was a lot of back and forth, and you will be very glad to exit the trade here, be out, done with it, and not have the headache to deal with what is going on here afterwards. Now another variation of another pin bar pattern, multi-time frame approach, and let's see what we have. We're starting here with a pin bar at a round number. Round numbers are very, very important in any market. They are used by many traders. They are used as a mental shortcut. A lot of programmed and algorithmic trading strategies are also referring to round numbers because they're just very objective and many traders use them. So whenever you see a good candlestick pattern or add a round number and it makes sense in the bigger picture, that's a good starting point. We see here our pin bar at 170, very big round number. Then we go to, this is the 2 hour, we can go to the 1 hour to see a little bit more of nuanced micro price structure. We see here an engulfing candle and a little bit more noise. So we have noise and volatility, which is often pointing towards turning points. We can even go lower, and on the 15-minute we see our beloved triple tap. We have this high to this high, very strong push, but then you can see the market is kind of running out of steam. From here to here, a very weak push, a little bit above 170. Shows a lot of weakness here in this market. And also you can see here, very strong selling candle. We can even go one step further and go now to the 5-minute time frame, where you generally want to look for entries. If we want to take it at the most straightforward and simplest way, you look for a breakout below the last recent low. Here, in this case, I mark this one. If you are aggressive, you can also go for this low here. It's a previous flip zone, super resistance turns into support. You would be in a little bit earlier. But if you're on the 5-minute, there's no real need to be super early. And generally, you will be glad to wait, in general, one candle more. And that will often save you a lot of money. A lot of traders make the mistake of jumping into their trades too early. But what I've seen helping other traders and mentoring many traders is that waiting one more candle can often make a huge difference. So we have the breakout. Again, stop-wise, you generally want to put your stop loss somewhere in here, not right at the area. There's often the chance of a liquidity run, which we have seen here. Not a very deep liquidity run. Again, I turn on the Bollinger Bands because it helps us really understand price structure. We can actually take a look here at this Bollinger Band. And what we see here on the left side during the uptrend, the market sticks to the upper Bollinger Bands. You can see that we barely reach the lower Bollinger Bands. If we reach the lower bands during an uptrend, you can see we just peek into it and then we shoot higher from it. That's a healthy uptrend. If this changes and we suddenly start to trade longer into the lower bands and don't reach the higher bands, that's a sign of a downtrend. So you can really nicely use the Bollinger Bands as a trend filter or just as a tool to help you understand what is going on trend-wise. I would really recommend to try them out. There's no need to change the settings. You can start with the 2.0 standard deviations, which is the default. If you want to experiment, I sometimes use the 2.5 standard deviations as well. Let's take a look at a different example, no more pin bars, but we're going to look at engulfing candles. And what we have here is an engulfing candle at a round number 1.57 and also a support and resistance flip zone. Generally, if you have a multi-time frame approach, you want to look for signals, in this case candlesticks, where more than one confluence factor is coming together. A confluence factor can be, like in this case, a support and resistance area. It can also be a round number. And we have here our engulfing candle, a very strong candlestick. We go to the 5-minute to understand price action. And again, here is the Bollinger Bands. What we see on this chart for now is a healthy downtrend. We trade mostly into the lower bands. Here we don't reach the upper bands at all. And you can see this changes kind of here, where we for the first time dip into the higher bands. This is not a bullish signal yet, but we have here at least a deeper pullback. If the market moves lower and trades away from it, that's a pullback. But if the price is sticking to the higher band for an extended period of time, that would be more of a bullish signal. I also activated the higher time frame moving average, the 4-hour 20 period, which is this line. And you can see we are trading around it. We have used it as support, traded below it, and now it will be interesting to see, can the market establish it above it or are we falling below it? What we see afterwards is kind of a break and retest. You can see we stay outside and on the higher Bollinger Bands. We break above the moving average, retest it, And now we're moving back into the higher bands, which is a very different information and signal than what we have seen here, right? On this side, we mostly stay on the lower end. We never reach the higher bands. This is now changing, and I would say now it looks much more bullish than bearish at this point. We can also activate the pivot points, the daily pivot point. And what you can see is that the market is now above the pivot point. It's getting above it. We have not really fully retested it, but you can see everything is looking a little bit more bullish now at this point. And what happens afterwards? We keep trading on the outer bands. We don't reach during pullbacks the lower bands, which is a very bullish signal. We immediately move back into the higher bands, and you can see the market keeps trading higher. What happens afterwards is also very interesting. You can see when the market makes a complete reversal from the higher band to the lower band and then stays there, that's the sign that the trend is reversing until it changes once again. A triple tap is here. We retest the higher time frame moving average, and it seems like now the market is pushing higher. But you can very nicely see how we can follow the market structure. The price action candlestick is here really our filter, so we don't have to be glued to the 5-minute time frame all the time. We can stay on the 1-hour time frame until something interesting is happening as a candlestick, and then once we have that, then we can start going to the lower time frame and start making a case for trading plans, build our trading strategy idea, and then slowly follow the trade until it unfolds and we're able to get into a trade. And now I want to spend just a few moments on do candlesticks work, because I get this question a lot, and there are obviously, I think it's a very important question. And a lot of traders believe that candlesticks are too simplistic and that for that reason they don't work. A trading strategy has to be a little bit more complex. And I would say that candlesticks, the way most traders trade it, is too simplistic. Yes, I would agree in that sense. You cannot expect to just look at a time frame, whatever it is, 4-hour, 1-hour, daily. You find a pin bar and then you jump on it and trade it away from the pin bar. I don't think in 2022, 2023, or whenever you're watching this video, this is working anymore. However, what I've shown you here is a very different approach. We build our trading strategy step by step. We have really a strong case for our strategies or for our candlesticks. We used candlesticks as our first filter. And then we slowly start to observe, do they make sense in the bigger picture? Do they make sense trending wise? Are we trading with the trend, against the trend? Are we trading in a range pattern? Do we have other confluence factors, support and resistance, which are areas where the price in the past has shown a very strong reaction, which then makes it more likely in the future to see a similar reaction? Then we can use microstructure on the lower time frames. We look for volatility information, candle size, and all of that. If you combine candlesticks with that, or actually look at candlesticks in that way, I would say your chances are increase of finding a profitable trading strategy. Whereas just using a candlestick and then hoping this will work out, I think that's a very optimistic and too optimistic way of approaching trading. So candlesticks definitely can work, but I would say make sure that you understand what you're trading, make sure that you are looking at the whole picture, and then I think you have a much greater chance of making candlesticks work. Let me know your thoughts in the comments if you like this video, and also what you think about candlestick trading and what your experiences are.